Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, November 27th, 2016. Hope you guys enjoyed the shortened week last week. If you celebrated Thanksgiving, I hope you had a fantastic Thanksgiving, and let's get started. So on Friday I was away, so I wasn't able to do an update. But we saw the bulls continue to push forward, and it's quite an impressive run that they're doing right now. One of the options that I was saying was that once the S&P broke this wedge, that they were going to come up and do a back test, and even if they do a back test, it's going to be making new highs. We really don't have the bearish divergences that I like this, so it may take a little time where it chops around, or let's just say it stops going up, and from there, that's when we could anticipate to get the pullback. And if we just take a look, we're very overbought right now, so this march up should slow down. From that, we should start to see some of the technicals starting to turn down and then make one more new top. That's in a perfect world. Now, if we take a look at a 60-minute chart, this is showing us that, we already have we have the bearish divergences in place. We've been very, very overbought, and even the wave count fits for some type of pullback. And really, the main thing that the bears have to do is push it through this 2180 level, which is a support. And you can see once it popped above it, it was using this as support. But still, we have 5 waves up, so that typically means that we get some kind of pullback down to the 50%, 62 or 78% retracement. So once this does kind of filter and we get the pullback, these would be the target areas, would be right around here. And what may happen is, it comes down and then heads back up, and that's actually going to be the that pullback that starts bringing the technicals down. So you can see we have a moving average at 2151, and if we go to a 60-minute chart here, we have 2148 is a 50% retracement. So that may very well be the area, and we also have some moving average support. So if we get a pullback, this is probably just the areas that I'm anticipating, and then from there, there's a good shot that they can continue higher into the end of the year. Not a lot of people were anticipating this type of move. Most people that thought that if Trump won, the market was going to crash. So right now they're getting everybody on board. We're still going to get those hiccups, especially after we get moves like we see where everybody just piles in, and eventually there's just not enough buying power to keep things sustained there, and we get a quick drop, and the drop could be anywhere from 5 to 10 to 15%, but it feels like a crash just because we never you go this long length of time without any type of pullback. So when we get something like that, you have the bears coming out saying, we're starting the new bear market. Bulls are panicking, and then once they're out, it seems like we're finding support and just pushing to new highs. So I do believe that we are going to get the hiccup. It may start. The markets for the last couple of years have been known to start a downtrend right towards the end of Christmas, or the December time period into the early January, and from there it gets we've been seeing it pull back into the February, March. So the market's been very predictive, meaning they haven't really been trying to throw curveballs on those types of moves. So there's a good shot that we could see something very similar to that this year, but we don't know if it's the S&P is going to be trading at 2,300. It's where it is. Then it's kind of hard to say. But right now, like I said, the wave count as well as the bearish divergences are saying that we should get some kind of hiccup, and a bare minimum should be someplace down to the 2148, and then maybe from there that's when they have the last bigger move that heads to the upside here. And again, it may just be back testing this broken wedge, but if this comes down for a few days, it's just going to make this go up higher. So that can fit the profile as well. So anyway, that's really what I'm looking for right now, is this pullback to come down, anywhere from the 2148, and it could go as low as 2110 and still be bullish. But the main thing that the bears need to push through is going to be this the 2191 and then the 2180. If they get through that, that's when we should see a quick move someplace down to this level here. On a 15-minute chart, again, we have the bearish divergences in play. We seem to be just following this channel right here. And every time we get towards the bottom of it, we're seeing buyers step in, but it's been following this channel, and it's a pretty aggressive move to the upside with it, and we have the bearish divergences. So it's not, as much as I'm not bearish on this market, just moving forward on things. I am right now. I don't believe that it's the time to be chasing this rally, because what we know is after they get these sustained moves like this, the drops come fast and furious. That's pretty much where I would like to get out of any short positions and probably go long for the Santa rally, and then probably start positioning myself on the short side heading into 2017, and that's about as long as I'm going to be going with things. So let's see what plays out tomorrow. It's really hard to give you pivots on where it could turn. I guess if they head up, we could be heading up to this 2220. This would make sense. So that would really be the next the target area. And once the bears can push it through this channel, then we should see some momentum pick up on the downside. And again, it probably could be a pretty good buying opportunity if things are going to go as planned. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.